Okay, 3, 2, 1. Good morning, traders and investors around the world. Sorry for the delayed start here. Pre-market prop with StockOdds here on a rocky Friday morning here. Joel Alcana along with Rob Friesen, and we're just going to do a little level talk today.
Let's just frame stuff for a sec. Let's
Go
frame
ahead,
stuff
Rob.
for a sec.
Go ahead, Rob.
And then we'll get into the levels here. Again, really important to understand context. How we got somewhere is important. What the drivers are. You know, if you're gonna melt down or you're gonna rally, you wanna find out why. And it's not like the talking heads why, and bring out everybody that wants to support the buy side or the sell side. Traders have to do more thinking for themselves, and there's multi-factors sometimes. So I mentioned to some of my traders today that this is a Friday, and normally seasonality supports today in terms of the first Friday of May is generally more to the upside, as well as Fridays in May overall have been relatively good, very different than Fridays in April. The problem is we're ahead of a weekend, and we still have war, which in the last sample of seasonality that we have, 8 to 10 years, there hasn't been war. And unfortunately, we have a kind of a deadline by bias from Putin, which is May 9th, Victory Day celebration. And it's a parade, and it celebrates 1945 victory, blah, 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 blah. Okay. So the question is, what is in store yet between now and May 9th? Or, will May 9th be the declaration of war officially, blah, blah, blah. So this is kind of a treacherous time. So that's why I said it's to Joel, it's really important that we go through the levels, that you understand them on the Qs, the SPY, the diamonds, and the Russell. Okay. Those four horsemen, we need to know what those levels are, because when you have elevated volatility like we have, it's moving fast too, but it's still elevated. It swings both ways. So you can be down, and then you hit a support level, and there's a bite, and the algos kick in, and we rip up, right?
Yeah.
And it can happen even if we break through just temporarily and then reverse. You can get yourself really caught. So I want Joel to run through the numbers. I trust him on these levels. And
and I want you to point out something if I'm missing something too. And
okay.
Because you have your differing slant, but wow. And I didn't know we were going to do a show today because I had some things going on. Rob's got me all excited with the levels here. So
like one exercise I used to do with traders is what's called vertical bar analysis, right? And it's not even using candlesticks, it's just using high-low, open and high-low close bars. But to really look for those key areas that we actually had a move or a gap or multiple closes, all at the same level.
Yep.
To really dial in and spend some time. And then I called it day trading tape, and you would write it on some tape, all the different levels, and stick it to the side of your screen so you never forgot it, kind of thing.
Okay.
Anyway, go ahead.
Let's now I'm an expert in the S&P, but the IWM and the Russell, I'll do my best, Rob.
Yeah, well, it's the same principles, right?
Yeah, the same principles.
The ETFs follow the futures, but I think most people don't subscribe to futures.
Right.
Unless
okay. So here we go.
Many traders like you are.
I wish we would have done this on Wednesday or Thursday, because I'm just going to give you the upside here, and I'm going to tell you where we got to clear. I mean, in order to get for me to be totally out of the woods right now, and this is just based on this week's analysis, for the S&Ps, it's way up there. It's 4,300. And there's a couple reasons I'm saying that. We hit it twice last week. We hit 43.0350 on the kisser 2 times last week.
Yeah.
What do we get to on Wednesday? 43.03, right? Now, Thursday, I was licking my chops for that number in the regular session, and you know what? We never got there. So that is my line on the upside. I know it's a long ways away, folks, but we could be in a trading range, and hopefully we're in a trade. This could be the bottom of a trading range. We could just drive people crazy. And this is what I'm looking at for today's a big day. So I'm looking for the bottom of the trading range. All right. We pierced the March low, the February 24th low. We took that out. Okay. We took it out on Monday and we went to 40.56. Today they pressed it. They really pressed it, but they got it. They missed it. They got it to 40.62. That doesn't mean that they're not going to get it later on.
Right.
But that to me is a trap door in the S&Ps. We lose that level, close below that level, and I'm really looking for a lot more downside. I don't even think 4,000 is going to hold it.
Well, we have a big air pocket here, and you got to understand what had caused us to rally from the lows in March of 2020 until most recently in January, the high, is the stimulus money. And so when you take away that punch bowl, and even worse than that, you have some discipline in tackling inflation. This says that we could erase some of that movement that we had because of the stimulus.
Right. And if you want to get and Dennis and I debate about this a lot, and he calls this low right here, he kind of calls it like a fake low, the COVID low, because it was
that's fine. I mean, we can agree with that or disagree, doesn't matter. But what's going to be more important is the high that we had before that, before we dropped to that low.
Yeah. So
right?
yeah. So I mean, I don't want to have people heading for the hills or anything, but I'm afraid if we lose this week's low, we could do a 50% retracement of this whole move, and it could move down to a move to 3,500. Do I think that's going to happen? No, but that's my setups there in the S&Ps. The IWM, I'm not as familiar with. This is concerning because you did breach the low from last month. So what I'll do in this one, just because I'm just trying to be a happy bull here, and I want the market to go up for my long-term portfolio, I'll draw a line in the sun here. 180.76 was your December 2020 low, and we got to 180.82. Man, we're ripping. So the longer right there, that's my lean on area for the IWM as far as must hold support. And the thing that I like about it is it does coincide with another monthly low. So there you go. That's what you're looking at in the IWM. For major resistance, I don't have like as clean a top as I do in the S&Ps. This is just a little sloppier. So I guess you do have if I had to pick my upside level right here, where I'd say, we're, a little bit of a trading range. I would say, a pair of highs there at 194. So 180 to 194 would be, the similar, is this 194 here? No, that's even higher than that. So it did do anything on the monthlies. So, but we can put that in there and keep it, don't always get, dailies to line up in the same way.
Mm-hmm.
Triple Qs, boom, boom. I mean, same thing here. I guess, what's the low here? You got the 300 here. No, actually that was 297.45. I mean, that's what I'm looking at. 305.11 is the low. I mean, right now we're moving ourselves away from it, but if in fact we lose this 305.11, you could be looking at 300 or 297. What's jumping out to me here, like just hit me aside the head on the upside, is this 371, 372, not one monthly high, not two monthly highs, but 3 monthly highs. I'll call it 370. Just because the range is from 369 to 371.83, I like to go with the round numbers. So there's where you're out of the woods. And then, You also could figure 50% retracements on that. Also on the dailies here, if you want to be a little bit, this level really lines up with the S&P much better. And I would say, maybe if there's a trading range here and this is the top of the range and you think we're going to chop for a while until we get some good inflation numbers, I would look at that. I would look at 330 as the top of the range for the IWM.
Yeah, I would think, I would think there's a fair amount of people trapped in that 350 to 360 area, just because of that sideways. And we looked like we were going to tackle it and go through it a few times. So.
Okay. Do you want to do some stocks, or do you want to go to some crude?
Did you bring up the SPY?
Yeah, the SPY is going to be the SPY. I mean, that just 430. That actually you could have gotten filled on Thursday, and that equates with the SPOOs, right?
Yeah.
So,
but I mean, a lot of people are using the SPY, as a
430 Friday, or excuse me, Wednesday's high 29.66. Your high from last week was 29.64. You didn't get the same kind of pattern in the SPY because the SPOO hit was a little bit higher on this day in the pre-market, so that's a little farther away. But 430, if you're swing trading things here and you're looking for a trading range, if the SPOOs are going to be from 40.50 to 4,300, then the spider is going to be from 405 to 430.
Just hold here. Just remember, the SPY is, again, market cap weighted. You've got the FANGs in there that had some serious issues, Facebook and so on. Some of that changed with their last earnings report, as you're aware of. So the SPY can certainly trade quite differently than the diamonds, which are the Dow, which is a price weighted index. So bring up the diamonds, DIA. And generally this is a little bit more defensive. It's kind of like today's, the symbols that I selected were more defensive in nature overall, consumer staples, things like that. But
now this one, very interestingly, gave you a little bit better of a shot. Ooh, it only missed Tuesday's low, or it only missed Monday's low by 29 cents. So there is and interestingly here, if you want to say on a relative strength basis, the Dow's holding up a little bit better, right?
And usually between May and October, we get this posturing anyway. That's the whole thing of sell in May and go away kind of thing. And so small caps generally perform worse. Now, I would be preparing for a summer rally. I think we could have a weakness, before that still. But once you get the Russell rebalancing out of the way and all those adjustments and stuff like that, we start to have earnings season in July. If that starts to go well out of the gate with the brokers and banks and all that, you could have a nice summer rally, which would probably include the small caps. And that's where, probably the Dow has been stronger relatively until then. And then, we get the small caps kicking in. And we have seen that before. This is not, you wouldn't be a new thing. Okay.
Yeah.
Does that just seem to fit with what you might be thinking too?
Yeah. I mean, I'm a wait and see level kind of guy. Yeah. As far as predicting out. But and if you want to,
I just like to run scenarios, it's a potential scenario.
I mean, I'm just, for the short term trading, you love to see the volatility, but for your long term portfolio, you want I'll just give you a level here in the Dow, the diamonds, and that's 341. That shaped up pretty good too. What I think you need to see as far as projecting out is we need to calm down. Okay, we're over 100 points. The VIX is elevated. We're over a 100-point average daily range. Now, it looks like we're clawing our way back here, but like the move on Wednesday, that wasn't healthy. to go
Right.
straight up on the Fed number. And you saw what happened on Thursday. We know Thursday wasn't a healthy move either. We came crashing down. So, however we turn out today, let's say we close at 4, let's say we don't go anywhere from now, which is not going to be the case. I would like to see a couple inside days. I would like to see things calm down. I'd like to see the VIX come in a little bit and then build a foundation. When you had the bull market, the road, I mean, it was up, boom, 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 up, boom, 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 up, maybe a little pullback back, up, up, up. But we got to calm down. So that's my assessment moving forward. Like you just knew Wednesday wasn't a healthy day. I
Right.
do want to just alert our crude traders here. I don't know how many are trading it. I got a big level for you here in crude, and I probably need to adjust my Fibonacci line a little bit. Crude extremely volatile, but this is what I'm looking at. This is a big level. 110 is just a huge level. You got overdone at 129 and you got the pullback. So now when I see these kind of moves like this, and you did get back half of it here, can crude get above this 110, hold, stabilize, and then work its way back up? I'm hoping it finds resistance here and comes back down. But that's the crude market for you. We did the S&Ps, we did the triple Qs. We did the IWM, Rob. What else do you want? Anything else? Bitcoin.
I warned or just reminded my traders yesterday of the curbs, the levels that if we decline a certain amount, it's halted for 15 minutes. So I'll just rattle that off right now.
Okay.
So the first level is a 7% decline, and it's all based on the S&P 500, right? So the index itself. So if we decline 7% from the previous day's close, we get a 15-minute trading halt. However, if the 7% decline occurs within 35 minutes of the market close, there's no halt. Level 2 is 13% decline, and then again, that's a 15-minute halt. That means it can't trade during that 15 minutes, a cooling off period, right? And then it can reopen again and drop further. So a 13% decline, another 15-minute halt. There would be no stop in trading if it's within the last 35 minutes of the market close. Level 3 is a 20% drop that results in the closing of the stock market for the remainder of the day. The reason I brought that up is because today is the anniversary of the flash crash in 2010. Now, I'm not expecting a flash crash, and there's things that have been put in place, but it is strange how here we are with this kind of weirdness in the market on the anniversary of something that occurred on the same day back in 2010. It's you can Google it. It's a good listen to my friend Ben Lichtenstein commenting on Traders Audio Squawk during that day. That was a crazy day.
Yeah, that was fun. And do you know that Dennis wrote about that in January, because there was a stock Rambus did a flash crash, and Dennis wrote an article for the CFA magazine about what if that happened to the whole entire market. And then it ended up happening in May. So, all right.
But my point is, as we roll into this weekend and we go into Monday, Monday could be an interesting day only because of this, Victory Day thing for Russia. I don't know what could happen over the weekend. I'm not trying to instill fear. I'm just saying that the markets don't seem to me to be very healthy. Okay. That's the takeaway I get when I watch and experience the action. And I think
they're
you guys
looking
can
pretty
agree.
healthy to me right now, man. I mean,
healthy. I mean, this is the problem with humans, is that when something's going up, we weight it thinking that it's going to continue to go up. So healthy in a sense of the price action is kind of bizarre, especially yesterday after we had moved down and then we were trying to bounce a little bit. We came off the bottom, and that price action the remainder of the day was just weird.
Bonkers. Yeah.
Right.
Okay.
Bonkers.
All right.
So, but in declining markets, you can experience, in bear markets, you can experience severe upside moves. I just want people to be prepared. That's why I wanted Joel to go over the numbers, look at any support. And because we've been up and down, you got lots of numbers to look at. So dial in and remember them and trade smart. Okay.
Okay. All right. No show on Monday. Just a quick heads up. And if you guys want to tune in to the at the close, join me at 3:15 because I'm going to reveal my Derby pick, my Kentucky Derby pick. All right, everyone, have a great weekend. Be nice to your mom on Mother's Day, and back with you on Tuesday.
All right, you guys, take care.